These are the equity curves for the 10 strategies in the new 25K portfolio. We had the webinar today. I'll show you where you can get that webinar recording after I go through these equity curves. There are 10 strategies, 10 algos you can trade in 2020 that we recommend for 25 to 50K account. And I'm going to go through those now. And I first want to say that when I design a portfolio, I like to trade strategies that are both have strategies that are in a run-up and have strategies also that are in a drawdown. I like to have strategies that are trend, and I like to have strategies that are counter trend, and I like to have strategies that have a diversity of exit techniques. You can't have strategies that have, for example, tight stop losses or cut profits and let profits cut losses and let profits run. Those are some of my favorite strategies, but in a very counter trend market, you can't just have those type of strategies. You have to have counter trend strategies too. So this is what we're going through here. I'm going to show you the equity curves of these strategies. This is Cobra Crude Conservative, a crude oil strategy. It's recently made equity peaks, and it's a simplified version of an older version that I have. This is Cobra CT3, E-mini S&P. Went through a drawdown here, and it has bounced back. It's a counter trend version for the E-mini S&P. Very high average trade profit, $88, and that's a high number for a day trade strategy. So you see that equity curve. Here is Cobra 3 E-mini NASDAQ, 53.46 in recent years though. The last 2 years we see 155.12, and you see the recent drawdown, and I'm okay with that because this is exactly the type of strategy we're talking about, a strategy with a tight stop loss, and it lets profits run. You see the largest losing trade is $600 because the stop loss is $600. The largest winning trade is $47.25. So when volatility picks up, if we get a fast bear market or a fast bull market out of the blue, Cobra 3 has a great tendency to catch these moves. And so we want these types of strategies, but we also want our counter trend strategies because this just doesn't do much in a tight range. It either won't trade or it just won't hit a profit, close the day at a loss, or get stopped out. So that's the diversity. Here is Night Trader, and you see that many algorithms have, most day trade algorithms have between 5 to 8 and even 10K in drawdown. If they don't, they eventually will. And overnight strategies have between 10 and 20K drawdowns. And so how do you put these in a portfolio? You put different types of strategies with different methodologies so that when they're doing poorly, they don't weigh the portfolio down. Other strategies have a tendency to do well during this time period so that it doesn't destroy the whole portfolio, and you can keep that to capture these types of periods even though it has this type of drawdown in it. So that is Night Trader, and look at Night Trader over the since about 2016, the drawdown has been less. 257 average trade profit, 6,100. So that is Night Trader most recently. Really in sync with the market. Here's gap continuation, E-mini NASDAQ the last 2 years. Here's another one that has a tight stop loss. Cobra 3 NQ has a $600 stop loss. This has a $300 stop loss. So it has a very low percentage of profitability, and I'm okay with that. I like strategies that have low percentages of profitability because they have a $300 stop loss and they let profits run. And I like strategies that have 80% profitability because their profit target is closer than their stop loss. For example, Night Trader has a $700 profit target and a $1,500 stop loss, and it's about 80% profitable. And I'm okay with that. I have other strategies that are similar to that, where Gap Fill Master, for example, on the E-mini S&P has a $200 profit target and a $500 stop loss, has a high percentage of winners. And while other strategies have a tight stop loss and a bigger profit target, such as 800, or lets it run till the end of the day, they're going to have less than half the trades are going to be winners, but the winners are going to be much bigger than the losers. So you see the largest winning trade here, 40.45, largest losing trade, 300. And if these drawdowns concern you, then you can always back off and trade the micros now, because the micros are a 1/10 the size of the regular market. So you'd have a $30 stop loss per contract on the micro. So that is gap continuation 2019 NQ. And here is a time period, we talked about this in the webinar, where it doesn't do that bad. The average trade profit is low, 31.50, because this part weighs it down. But during this time frame, much higher average trade profit. Let me show you that again. 31 all the way back to 2007. Well, it's $100 during the most recent, since May of 2017. So same strategy. This is a longer term view. This is a shorter term view. Gap continuation 2019 NQ. Also trading at higher point values and daily dollar ranges. This is soybean swing. Had this strategy for a long time. It tests well back to the 80s. Most recently, the equity curve is not as steep as it is here. It's not as steep. The volatility has been less in soybeans, and the trends intraday have been lower. But this is a swing trade strategy, so it can take advantage of swing trades. Low drawdown, and when you test it over time, it also has a low drawdown. So I like this strategy. And you can test it on pit data as well. There's a conservative and aggressive version of this strategy. SR countertrend for crude oil. This one tests well back to the 80s also, and you see a drawdown there. See this drawdown here, and then some nice smooth equity curves. Drawdown here. And most recently, it's pulled back a little bit, and that's what I like. I like to add strategies to the portfolio that are not at equity peaks. I don't want to add a long list of strategies that are all at equity peaks. So there is no perfect strategy, and so you have to have a portfolio and mixture of different types of strategies. This is SR countertrend 3 crude oil, and it's an addition. It's a new strategy addition to account for longer cycles. So if you have a day trade strategy that buys the dips, tries to buy these dips right here, and for example in recent years, if it tries to buy this dip, it's intraday, it's been a little stubborn, it'll just go, no, we're not going to bounce. We'll wait till the market closes. We'll wait till tomorrow to bounce. We're just going to stay down here. So then you exit here at a loss, and then it bounces. And so this is an answer. SR countertrend 3 is an answer to a longer cycle that doesn't happen as quickly intraday. So once again, if you hold it long enough without putting in a big stop loss, we don't want to move our stop or have an infinite stop loss scenario, but you can do that within reason. You see the equity curve. This proves it with the equity curve, and some minor changes to SR countertrend 2. And SR countertrend 2 and SR countertrend 3 are in some of our bigger portfolios. So they're two different strategies. One is day trade. One is an overnight swing trade strategy. So that's the SR countertrend 3 overnight crude oil, and this is the gold version. Nice equity curve is here. Recent equity peaks, but pulled back off of that. 136 average trade profit, $5,400 drawdown. So SR countertrend 2 E-mini S&P made some equity peaks up here in 2019, and we really like this strategy. E-mini S&P is ideal for countertrend trading, and SR countertrend. This tests back to 1997, so you have to like that. 1997. There's the drawdown. There's the average trade profit. It meets our $50 minimum minimum average trade profit requirement. Only thing I wished is there were more trades, about 20 trades per year. Wished I could get about 1 trade per day with these same statistics would be great. So that is those are the strategies. Let me see, are there any more that I missed? Back to the beginning. So those are the strategies in the 25K portfolio. Those are the equity curves and how we set up our portfolios.